Isn't that fascinating? Today, pretty much everything is going down, but there is this one token on the Solana chain among the trending tokens that's actually going up. The question is why? Who is buying here? Who's selling here? And of course, what is that token? The answer is here. It's collateralized. It started trading 3 months ago and now has a liquidity pool size of 2.4 million with a market cap of 72 million. Now, charts like this can be scary because in the end, crypto is about buying low and selling high. And obviously we are currently not low in the price. But then we always have to think, how much higher can we go? What's the story around this? Is this just another meme coin? Or is there actually the possibility to maybe 2, 3, 4, 5x still from here? Collaterize is riding the real world asset narrative. Very similar to Ondo Finance, which is one of the largest protocols in the space. The tokenomics look quite solid. 90% goes to the community. Only 10% are getting vested for strategic expenses. The project has 1,000 downloads on the Google Play Store. It's got 17,000 followers on X.com, formerly known as Twitter, and it's got 13,000 holders on the Solana chain. Now, not all of those holders, not all of those wallets are created equal, right? Some of them might just hold a few cents of the token because they might be arbitrage bots, while others hold hundreds of thousands of dollars worth of the token. So you have to look at this in a bit more detail. What we are seeing here is the number of first-time traders versus recurring traders over time. And there had been a peak on the 19th of May. So that was over here. The price still continued to go up, and that happened while the number of first-time traders declined very rapidly. So this gives us a first hint that maybe the secondary rally is not driven by a lot of new people coming in, but rather driven by the smart money, by the whales that might accumulate the token now. Over here, we see the trading volume over time in US dollars. The first day had a ton of trading that was upon launch. Then came a secondary wave in March of this year. And now the token starts to live again. But again, in the last few days, trading volume tends to decline rather. Now what you can see over here is that there's different wallet cohorts. There's small retail, medium-sized retail, and large retail. So you're looking at the size of the wallet. How many tokens are being held in that wallet? And so when we normalize the trading volume to 100% every day, then we're seeing an interesting development. It appears as if large retail and medium-sized retail tends to take over more and more of the trading volume. So what's declining the most in the last days is small retail. Now, the number of small retail investors is going up. So is the number of whales. The way we make this distinction is by looking at minimum holding thresholds. So we counted for the wallet on the left, that wallet has to hold at least 14,000 collateralized tokens. To be counted for the chart in the middle, the wallet has to hold at least 140,000 tokens. To be counted on the right, it's 1.4 million. That's worth $1,000, $10,000, $100,000. We can see that in the last days, the small retail investors grew in numbers, but so did the number of whales. The middle didn't do much. But here's the chart that's really revealing what's going on. Here's the token ownership based on different wallet cohorts. And the whales tend to take over more and more of the supply. The wallets that have at least $100,000 worth of the token own at least 70%, with the tendency of this increasing over time. Small retail tends to own less and less, and especially the middle is shrinking the fastest. Right now, most of the trading volume still happens directly on-chain on Solana, so you can track everything. What I believe is going on here is that the market makers, the centralized exchanges, the smart whales, they are accumulating the token in anticipation of more centralized exchange listings, potentially also perpetual future exchange listings. The real-world asset narrative is huge. Ondo Finance has a market cap of 3 billion with a B. That is 40 times larger than Collaterize. Now, I'm not saying that Collaterize will do a 40x tomorrow, but still, there is some upside here. And especially once we see the listings on those centralized exchanges, the price will jump. And probably at that point, it might make sense to take first profit. Right now, this rally looks healthy to me. The big whales are buying, they're taking over the supply. And they tend to outperform the market, right? That's why they are whales. Now, fundamentally, the problem is that returns are very much concentrated in a few assets. Most assets tend to go down, and there are a few altcoins that make the multiple triple X returns. And the problem is those assets change over time. What worked well yesterday might not work tomorrow. And so it's always a game against the odds. And so we can't really deploy a lot of capital in those trades. If the likelihood of losing is very high, it means we can't deploy too much in the position. It also means we can't necessarily diversify, because if we now own 10 or 20 tokens, most of those tokens are losing. And if then the few outliers make up for all the losses is a completely different question. It's very unclear. Now there is a way to make money a bit more consistently, and that's actually trading the larger tokens. The issue with the larger tokens though is that they move very much in tandem with the overall market. As in, when Bitcoin goes up, then Solana tends to go up as well, Ethereum tends to go up as well. But there are movements within crypto where sometimes a particular asset class is more preferred than another one. And we can play on that relative valuation. We can play on attention moving from A to B within crypto without having to try to find the few winners. For example, have a look at this. This is the Solana dominance. So how much of all of crypto is currently in SOL? And there seems to be somewhat of an invisible ceiling between 3 to 4%. This is where Solana historically had been very expensive. Or have a look at this. This is the Ethereum dominance. It tends to be very cheap when only 7% of all of cryptocurrencies market cap is in ETH. It tends to be expensive when it's around 20 or 21%. And so we can benefit from this independent of where the US dollar valuations go. So if Bitcoin is going up or down does not interest us. The only thing that interests us is whether or not Ethereum will perform better than Solana, or Solana will perform better than Ethereum, just relatively speaking. So I saw that set up when Ethereum was extremely cheap in the middle of April. We got very close to the historical low that was formed in September of 2019. And so have a look at this. This is Solana relative to Ethereum. And when ETH hit that low point, I shorted Solana relative to ETH. So I was not interested at all in the Solana US dollar price or in the Ethereum US dollar price. I was only interested in the relative valuation. I saw we are high on the trading range and I bet on that range coming down. So here's that post. It's from April 13th. I'm opening a relative valuation short of SOL to Ethereum using Venus Finance. More information will be provided in a few hours in today's premium update video. So I publish premium updates every 3 to 4 days. And then on May 20th, I closed the position. And of course, other members made money with this as well. But I want to share something here. This is when the position was opened. Here is when the position was closed. And I want you to look at the Solana value. Again, we bet on Solana doing worse than Ethereum. Solana itself actually went up during the time. It appreciated by 25%, but Ethereum appreciated more than that. It went up by more than 50%. And so we completely canceled out the macro. We are not interested at all whether or not everything is going up or down on a given day. We made money just on the relative valuation. So within those few weeks, we went from 43K to almost 60K. Yes, I know these kind of strategies might seem a bit complex, and why don't we just buy an altcoin and make it 10x? But again, it's all about risk-adjusted returns. If we want to bet significant capital, tens of thousands of dollars, or let's say relative to your net worth, high percentages. If we don't just want to play with play money, but we actually want to make real gains, we need to use strategies that don't have an 80 or 90% chance of failure. I see people making these mistakes all the time. I even see people making mistakes with their risk off position. So let's say they don't want to be exposed to crypto, they just want to be in stable coins, that those stable coins just stay laying in the wallet. But there are opportunities to make very nice constant returns even with stable coins. So this is 16% APR. This can be achieved on Hyperliquid without a single trade. This is all just automated arbitrage by the market maker. But of course, I've also got my risk on part of the portfolio. And here's something other people don't show. Most people just show individual trades and say, hey, this is how we always make money. Very few people are actually willing to share their overall portfolio performance. Now, I started trading on Hyperliquid on April 22nd, and here is my P&L over time. And since I'm sharing all of my trades, the members can just copy me. And this is actually very nice feedback. The same kind of portfolio development chart. This chart tells a story. First trying it without any support, and then afterwards, where this green arrow is shown, exclusively following Gerhard's trade and slowly digging out of the hole. If you've got the right risk management in place, there's actually a lot of money to be made in this market still. But actually, I don't want that everybody is just copy trading me. The community is about elevating our skills. It's about learning as much as possible, helping each other, finding market opportunities, and then of course capitalizing on those opportunities. So I've actually made more than 100 tutorial videos just on various topics within crypto, risk management, portfolio valuation, blockchain analysis. Feel free to binge watch this. It's actually nice to get those DMs. Hey Gerhard, I just wanted to thanks a lot for everything you've done. Since I've only been listening to you, I've been consistently profitable now. I just entered your, I've blacked this out, XYZ position as well. Or here, this is also another nice message. I'm not going to read through all of this. Feel free to stop the video. But yeah, if you want to join us, if you want to copy trade me, if you want to learn more about crypto, feel free to check it out. It's currently $125 per month. The price has actually been lowered because now the attention on crypto is much lower than it used to be a few months back. Once the masses come back in again, then the price will be back to 165. So if you're signing up today, you will never pay a higher price. If it's your first time here, feel free to subscribe. I publish here regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in Premium. Cheers.